The next one that stays is my trade and other payables. Now, just like my debtors, trade and other receivables, you need to know the format. It's extremely important. So the format for trade and other payables, you'll see it's very much the same as debtors. It starts with the creditors, accrued expense, income received in advance. Can you see both receivables and payables? If you put them next to each other, they both got a control, they both got a accrued, and they both got a future. The one has got, both of them has got an income and an expense. Okay, so the accrued is always the easiest. Obviously the accrued expense goes with payables. So then you know the future one is going to be an income. Whereas with the receivables, obviously accrued income is a receivable. So then the expense would be the future one. Okay. Then what goes extra here is everything salary and wages. So you're going to have your creditors for salary or wage, which is your net. You have your SARS payee, which is different than your SARS income tax. All of that is being paid over to SARS, but it's different types of tax. Okay? Payee, pension fund, UIF, medical aid, and they can go on forever. Now remember these three here. This one is just the contribution. But these ones are the contributions, deduction, sorry. This is just the deduction. But this one here is the contribution and the deduction. What's the difference? The deductions forms part of the gross. So in the end, your gross is divided into the net and the deductions. So now in the balance sheet, you show it separately, because you want to show what you owe to who. Always remember, deductions makes your gross less, whereas contributions makes your gross more. Gross being your primary expense. This is your primary expense for employing this person. Okay. So, your expense doesn't become less. That doesn't make sense. But what you owe to this person specifically is going to become less. Okay. So let's go on. So creditors becomes a big note because of the salary wages. Okay. But then, very important, I have my SARS, income tax, if it has a credit balance. Remember, with receivables, it's if it has a debit balance. I've done enough of that. You guys fine with that? Now I just want to know the last one is my shareholders for dividends. You can abbreviate it like this. Just don't just say with a D, then it looks weird. Just write dividends at least. And this is always your final one. So I want to go back to the note for retained income. So if I look at retained income, retained income is actually your appropriation to account. It starts with an opening balance and it ends with a closing balance of what? Retained income. Okay? So now what do? I'm going to add my net profit after tax. In other words, the 70%, not the 100%. Okay? Then I'm going to the next two things is brackets. And please, if you don't put your brackets, they won't give you your marks. Please put your brackets. So, the next two brackets, the first one is the repurchase of shares above average. Ne? And this one is going to be your dividends. Just write dividends. And this is going to be interim, final. Now that final one, that one, is the one that goes here. Can you see it's not the total? Okay. Now I'm going to explain retained just now. I just want to make sure that you're always aware of the reversing things. Okay? So the first basic where you always start is that your total assets equals your total liabilities and equity. That's the first place. And I know my non-current and my current adds up to this. My shareholders' equity, non-current, current adds up to this. Okay, so that's your two parts that you can play with. So, if I have this one, I have this one. If I have these two, I can calculate that one. Ne? Let's say this is 100 and this is 60 and this is 10, then 100 less 60 less 10 gives me 30. Okay? And because I have that total, I can calculate either one of those if they give me the other one. You guys with me? Okay? Same goes here. If I have this one, I can calculate that one because this less this gives me this. Or whatever. So what they like to do is they would maybe leave one of these out as well as one of these. So now I say this less this gives me this. This less this gives me this. That's not all that it is. Okay. Everybody still sharp. So now let's go to the retained income note. Just give that one to either Shanice or Esther who didn't get. Okay. Now, if I look at retained income, the first thing is basically that repurchase of shares. That's the thing that gets you guys the most. Okay. Now, if I go look at my ordinary share capital, it's always got two parts. The one part being the amount of shares and the rand value. Okay? So the units and the rands. That's always how it works. Okay. And it will always have an opening and it will have a closing. Now they have this long sentences for it, but you can just write opening and closing. It's fine. So it can either work, I issue and I repurchase. Okay? At average. Okay? Or they can give it to me open, close, and then I've got repurchase and issue. You see? So basically what happens is the order. It's important to have the order right because that's going to determine your average price. Okay? So what we need to realize, if the repurchase is here, I've got two options. If the repurchase is the last thing, I've got two options to calculate the average. I will take the closing rand divided units to get the average, né? Or I will take the total of the opening and the issue rands divided the total and issued units to get the average. Usually they will do it this way, and they will leave out the issued or the opening that you can reverse back. Let me show you an example. So let's say the opening is 10 shares at 100 Rand. The issued is 20 shares at 1 Rand, and that gives me 20 Rand. Okay, I'm doing a ridiculous exercise here. Okay, now they give me the closing is 25, right? And this thing is going to be very weird because I'm now literally just thinking out amounts. And this is going to be, say, 150 or whatever, which is not going to work. 90. No. 110. Okay. So now, if I look here, how many shares did I sell? So I say 10 plus 20 less 25, 5 shares was sold. Right? Now I say 110 divided 25 gives me an average of 4.40. So repurchase at 4.40 times 5 gives me 22, right? And this thing doesn't work out. 100 plus 20 is 120, it gives me 98. Whatever. Even if it doesn't work out now, I just want you to see, can you see how they got this? So most probably they won't give you that one. And now you have to balance on it. So 110 less 100 plus 22 gives me what? We don't even have to work it out. What is it? 98? No, it's not 98. Okay, let's just go on. You guys are fine with the principle. It's just about the principle. So in other words, if they say they repurchased it, now it's out there for the world, ne? For 5 Rand. Ne? Can you see we repurchased it for more than the average? So now when I go to retained income here, the repurchase shares is going to be 5 shares at, what's the difference? 5 less 440 gives me 60 cents. You see? And that's going to give me my bracket. Okay? So in other words, if I do the cash flow statement, can you see with the cash flow statement, what amount will I show in the cash flow? I want to show the 60 cents and the 440. In other words, the 5. So I'm going to show the full 25 Rand. So this here will be 3 Rand. Can you see I'm going to take the 3 Rand and the 22. So 25 Rand will go to the cash flow. Can you see that? Because that's what I paid them. That's what's making my cash less. Okay. Now if I do it this way around, where I repurchase before I issue, let's do the same example. Okay. Now they say the closing is 25. So again, I've got 5 shares repurchased. Okay. And they tell me my closing is 110. No, they don't give me a closing. They just give me a opening. So now, can you see nothing happened between the opening and the repurchase? So 100 divided 10 gives me 10. So this is going to be 50. Then 100 less 50, they're going to have to tell me either the issued information or the final information that I can reverse. But that's the difference. Okay. So now, if I say to you my average is 10, and I say to you we buy back at 12 Rand. Can you see now when I go here, it would be 5 times 2 Rand. No? The second option. Why? Because the 5 less the 2. Why? How do I get that? It would be the 10 Rand less the 12 Rand. That's the difference. Is everybody sharp? You are very brave for people who had matric dance yesterday. Okay. So, are you fine with the retained income note and the ordinary share capital note? Okay. So I think we have covered question 1.
Yes.
Is there anything on what they ask in question 1? Is there any specific adjustment that you have problems with? Remember, in this question, they also like to bring in inventory, ne? So be very sure. Look here. If you look at this example, they are literally bringing in the specific identification method. So for your inventory, you have to know your SIM, weighted average, FIFO. Is everybody still happy with that?
Yes.
Okay.